In the 1990s, Siemens didn't just pay foreign bribes, they legally wrote them off on their taxes. So how did this legal loophole turn into the biggest corporate corruption scandal in history? For decades, Siemens treated foreign bribery as a standard business expense. They maintained a massive annual budget, up to $50 million, just to secure global infrastructure contracts. But in 1999, Germany signed an international anti-bribery treaty. Overnight, Siemens' core global business strategy became a massive corporate crime. Instead of complying, executives took their corruption network completely underground, using shell companies, offshore bank accounts, and suitcases packed with cash. But moving that much money requires a paper trail, and senior executives needed plausible deniability. Their shockingly simple solution? The Post-it note. Instead of signing official documents, managers were instructed to write their authorization signatures on removable sticky notes. Once the illicit payment was processed, the sticky note was peeled off and destroyed, leaving zero evidence. But a missing paper trail couldn't stop international investigators. In 2006, police raided Siemens headquarters, uncovering a staggering $1.4 billion network of illicit payments. By desperately trying to protect a business strategy that used to be a legal tax write-off, Siemens ultimately triggered a staggering $1.6 billion penalty, the largest corporate bribery fine in modern history.
Good afternoon, everyone. Today, we are going to present our case study, which is Siemens corruption scandal. And let me introduce my group members. I'm the group leader, Sai, and other group members are JC, Gokhui, Loxing, and Li Jing. There are 9 parts according to our table of content. They are the introduction part and background and chronology of the case, and we have discussion part, impacts of scandal, the lessons we got from this case study, and critical elaboration, court actions against Siemens, conclusion, and finally we have implementation and recommendation. We have not only conclusion but also implementation and recommendation. And the introduction part will be explained by one of our group members.
As an introduction, nowadays, corporate scandals have exposed the dark side of global business, especially in 3 sectors: which ethics, governance, and compliance. Ethics means bribery already normalized as cost of doing business. On governance, it is got a big internal controls and oversight failures. And in compliance, whistleblowers silenced and not protected. So one of the largest bribery cases in modern history was also known as the Siemens corruption scandal, exposing how multinational companies operated with little accountability. So we are going into background. Siemens AG was a global leader in electronics, energy, healthcare, and infrastructure, employing around 400,000 people across the 190 countries. So despite its reputation, the company operated a cashbox system. It's a secret accounts used to bribe the officials. Bribery was seen as a cost of doing business tolerated by the senior management to secure their contracts. So between 2000 till 2006, Siemens channeled around $1.6 billion in illicit payments across telecom, power, transport, and medical equipment, affecting up to 160 countries, including Argentina, Russia, China, Iraq, and Vietnam. So now we are going into the chronology of this case. On 12 December 2008, the U.S. Securities and Exchange Commission, which SEC, issued a complaint alleging that Siemens have engaged in a widespread and systematic practice of paying bribes to foreign governance officials to obtain business over several decades, in virtually every country where Siemens operated. So 15 December, also same year 2008, Siemens accepted a clear deal, agreeing to appoint an independent monitor task with writing 4 annual reports from 2009 to 2012. On 2009 October, the independent monitor Theo Weger identified third-party resellers as a particular bribery risk and recommend a special review of how the company vetted them. And from the 11 January to 29 January 2010, Siemens China conducted a special review, and compliance official Meng Lingliu cited a number of red flags that should have placed resellers under more scrutiny. And on 30 June, despite these concerns, Siemens issued a memo freeing resellers from the hidden weighing in 3 out of 4 types of third-party transactions, effectively weakening the compliance controls that has been recommended. And on 12 November, Siemens fired Liu after he repeatedly raised compliance concerns and attempted to block the use of questionable resellers. On 11 October 2011, upon the conclusion of his monitorship, Theo Weger reported that Siemens had fully implemented all of his recommendations. And on 10 January 2013, the top sales manager at Siemens Healthcare in China, Cao Yongsheng, who had been ousted over alleged corruption, emailed senior staff at Siemens China warning of persistent huge problems and the continuing risk of bribery in local operations.
So for my part, we'll discuss about the fraud committed by the segment corruption scandal. First of all, the first is systematic bribery of French officials. The segment engaged in widespread and systematic practice of paying bribes to secure the global business contract. They assembled approximately 1.4 billion through 4,238 separate transactions across various business sectors like telecommunication, power generation, and medical equipment. They also committed the violation of French Corrupt Practice Act and Securities Exchange Act of 1934, especially the Section 38 of the Exchange Act. So the second is falsification of financial record. They fail to perform the accuracy of financial documentation, which using complexity mechanism to hide the money destination, such as off-books, account, and slush fund. They also mischaracterizing bribes as legitimate expenses for management and consulting fees. For example, they signed a sham business consulting agreement with former employee, or we call as a political fixer. So they committed for provision of Section 13B2A. So the third is the failure of internal accounting control. The management level have rooted the bribery practice as corporate culture, and also due to the lack of monitoring is rewarding the such of behavior, since they fail to implement the system of accounting control to detect and prevent the massive and illegal conduction. So they meet the first ever criminal charge for internal control prejudice under Section 13B2B. So to summarize all the fraud they committed, they also breach of broad level duty. Munich Regional Court clarified that entire managing board will be responsible in monitoring the functioning compliance management system. The segment reached the coordinated resolution by promising to afford the record-breaking 1.6 billion in fine, penalty, and dischargement to US and German authority. So the last segment required to adopt the independent corporate compliance monitoring to ensure the implementation of internal control.
Impact of Siemens corruption scandal. First, for the legal and financial impact, in 2008, Siemens paid approximately 1.6 billion US dollar in fine and penalty to the US and German authority. The company also faced a significant legal investigations and complaint costs. This became one of the largest corporate corruptions settlement in history. Next, for the reputation impact, Siemens experienced a loss of trust among customers, investors, and business partners. The scandal also damaged Siemens' reputation as a global engineering leader. In addition, senior executives resigned or faced legal action. Finally, for the economic and social impact, contracts were awarded through bribery instead of fair competitions. This reduced public confidence in procurement system, and honest business were placed at a disadvantage. Lesson learned from the Siemens corruption scandal. First, integrity over profit. Business success should never be achieved through bribery because short-term gains can lead to survive long-term consequences. Second, strong ethical culture. Anti-corruption policy alone are not enough. Ethical value must be practiced throughout the organization to prevent unethical behavior. Third, effective internal control. Companies should conduct regular audit and financial monitoring while also providing whistleblower protections and third-party due diligence to detect and prevent corruption. Lastly, leadership accountability. Leaders should set a strong tone from the top and maintain zero tolerance toward bribery and corruption to build an ethical and responsible organization.
Good day everyone. Now I will explain how the bribery happened and the corporate governance issues. The bribery happened from the 1990s to 2006. Siemens created secret funds and hidden accounts. They used consultants and shell companies to make the payments. The money was paid to government officials to win the business contracts, and the payments were recorded as consulting fees, commissions, or marketing expenses. This happened because Siemens had the weak internal controls and poor management monitoring. There was also a lack of transparency and ethical standards. The company focused more on making profits more than following the ethical business practices. Over time, the bribery became part of their normal business operation. Next, I want to talk about the legal actions against Siemens. Siemens was investigated in Germany and the United States. The company was found to have violated the Foreign Corrupt Practices Act. Siemens had to pay very large fines, including $450 million to the DOJ, $350 million to the SEC, and 596 million euros in Germany. Besides the fines, some senior executives resigned or were investigated. After the scandal, Siemens introduced a stronger compliance and corporate governance reform to prevent the similar cases in the future. This case shown that strong corporate governance and ethical business practices are important to prevent corruption and protect a company's reputation. Thank you.
In conclusion part, we have highlighted three important facts, which are strong governance ensures accountability and transparency, and the second one is ethical decision. Decision-making protects a company's reputation and long-term success. And the last one is continuous monitoring and strict compliance help prevent future misconduct. And then because these three facts are quite important for any business, because it's including the financial loss, legal penalties, and damage to corporate reputation. And we have three phases in implementation part. The first one is to strengthen internal controls, and secondly, the employee training and compliance, and the last one is continuous monitoring and improvement. And our group member decided to give some recommendations. Those are to strengthen corporate governance by enforcing stricter internal controls, transparency of financial reporting, and independent oversight to detect and prevent corruption. And we have another recommendation, which is to foster an ethical organizational culture through regular ethics training, whistleblower protection, and zero tolerance for bribery and fraudulent activities. Thank you for your time for our video presentation.